Hello everyone. Today I am going to give a short presentation on the article The Slumps That Shaped Modern Finance. The topic of this article is trying to tell us that in the ancient time, finance is not taken the considered as important element in the human life, but as the generation goes upward, that is in the 21st century, the finance has shaped its own important image in the human life. So, what is the abstract of this poem? The abstract means the summary of the article. Uh, the author had examines how five financial slumps have shaped modern finance and could help to guide the today's regulation. Now, introduction. According to this article, finance is not merely prone to crisis; it has shaped by themselves. There are five historical crises which shows how aspects of today's financial system originated and had offered the lessons for today's regulator. If we ask this question to the people, what is human mankind's greatest invention? Then the people are likely to give the familiar answers related to the technologies such as printing or electricity. That people are unlikely to suggest an innovation that is just significant that is financial contract. Um, people widely dislike the financial contract and they often consider as grubby, that is dirty. Finance does just simple things in the life. One, finance act as an economic time machine, helping savers transfer today's surplus income into the future or giving borrowed access to the future earning now. Finance helps to save money and it helps to increase the money. Next one is finance act as a safety net ensuring against flood, fires or illness, which means that finance helps to make insurance of the people, vehicle, and their business, from which, if any accident or losses occur, then it will help the people financially. From these two simple things of finance, people can live their life happily, whatever the situation occur, either the good or bad. Thus, the finance act as an engine of growth. When bubbles burst and market crash, then the finance will terrorize. Here, terrorize meaning is to make the someone feel very frightening by trying to kill or hurt them. And here the bubbles burst means happy time have gone. If the happy time goes and when the market crash occur in the market, then the finance will totally terrorize. Now there are five historical crises which I am going to explain. um, here is the first this is the first historical crisis which occurred in 1972. In 1972, Alexander Hamilton, who was the first Treasury Secretary of the US, wanted to build a sophisticated financial system like those in England or Holland. He began by creating the US first central bank, significantly larger than any other bank. It started extending large amount of credit, spurring speculation in short sales and future contracts. In March 1972, a decline in hard currency led to a 25% cut in lending. This sharp decline in credit caused a market crash and slowed down the economy. Fearing a prolonged crisis, Hamilton successfully arranged the first US bailout. Legislature banned public futures trading to protect investors, in response to which 24 traders met on the Wall Street to start their own private trading club that eventually became the New York Stock Exchange. Now, The second historical crisis was occurred in 1800. In 1800 century, new country were formed in Latin America. England was booming because of a strong export and had replaced Amsterdam as Europe's leading financial hub. Due to this, the crash reached Anne Britons, who was the native of the UK, browsed the government's bonds, which was issued by the new Latin American countries, along with the shares of English mining firms that planned to mine the new area, but these countries were far away and not well capitalized. Due to this, investors did not carry out sufficient due diligence and made unrealistic assumptions. Once the risks became clear, financial panic ensued. In 1826, more than 10% of the banks in England were and Wales failed. Now, in 1857, it was the third historical crisis which was occurred. In 1857, the crisis could be considered as the first global crisis, which was spreading more widely because of the formation of the new economic links, such as a result of the growth in trade. As imports increase from UK, then in the US trade deficit occurs, which leads to invest the surplus in US assets mainly in speculative railroad shares. In 1857, railroad shares started to decline, which was quickly affecting banks and spreading to the stockbrokers and merchants who traded with the US. Bank refused to pay depositors their funds, and the financial system failed in the US and Europe. In England, discount houses have been emerged. Discount houses is a new type of lender that keep the cash reserves at a minimum scale because of the perceived guarantee from the Bank of England. The Bank of England refused to involve in the failing discount houses, thus taking away the implicit state banking. After this crisis, England enjoyed 50 years of financial calm as a result of increased financial discipline. Now, it is the fourth financial crisis which will occur during the beginning of 20th century. The US implemented a decentralized system without a lender of the last resort. The number of banks grew continuously after the Civil War, including a new type of bank called a trust company. With lower capital requirements, less regulation, and higher interest rates paid, the trust companies also branched out into lending, which was initially created to hold clients' investments. And they also attracted a lot of money, and in around 1907, they were almost as big as the national banks. But as the banks closed and states declared emergency holidays, the nation faced a shortage of money. In 1930, the Federal Reserve Board was created as a lender of the last resort. Now, this is the fifth historical crisis. After this, the financial after this, the finance has saved their own image in the society. Uh, so the last historical crisis was occurred in 1920. The US prospered in the 1920 with the stock market booming along with the economy, but it started to decline in the late 1920th century. 1920. In 1928, the Fed decided to increase rates to curb stock speculation. The increased rate softened economic growth, which was damaging for domestic industry. But shares prices continued to rise. In October 1929, the stock market crashed, driving the Dow Jones down by 25% in 2 days and 45% in 2 months. The number of US banks failures was significant, nearly 1100 banks falling between 1929 and 1933. In 1933, the Fed refused to act as a lender of the last resort, but supplied and 1 billion of the public capital of 6,000 of the remaining 14,000 banks, and new regulation and agency were created, including the Federal Deposit Insurance Corporation, to help neutralize risks and protect depositors. Now, in conclusion, the abstractor point in the abstractor point of view, the modern financial system is not what Hamilton had in mind. In fact, it is the opposite. He wanted to create a system of bank and market supporting public debt. But now it is the government's job that how to ensure that the financial system is stable. This system creates or destroying subsidy at the heart of the capitalism. The recent fate of these largest banks in the US and UK shows the true cost of this subsidy. The bailout of the city groups and RBS was more than 100 billion, and the overall cost of the banking crisis is even greater in the form of slower growth, higher debt, and poor employment prospects that may last for decades in some countries. Thank you. If you have any queries in this short presentation, then please comment below. Thank you for listening.